ازيك يا مريم؟
الو الو. ايه
ازيك
الاخبار؟
انت عامله ايه؟
كله تمام الحمد لله. ازيك يا دكتور؟
الحمد لله. خليني كده اغير اسم الميتنج. وكنت بجرب حاجه جديده برضو لو انت موافقه،
اوكي.
انه ستريمد على يوتيوب لايف.
اوكي. اوكي.
ام تيستنج التكنولوجيز اللي الاي يو سي بتديها لنا.
اوكي جريت.
هنستنى دقيقتين وبعدين نبتدي. انت ايه الاخبار؟
كله تمام الحمد لله. انت عامل ايه؟
انا
هو
مفتقد الشراب الرهيب اللي انا الدرينك الرهيب اللي انا بعمله. وارجع اشتكي انا اتخيل ليه؟ ما جربتيهوش؟ مش عايز تجربيه؟
لا يعني ممكن اخد بق يعني بصراحه ما وعدكش ان اقدر اشربه كله.
ما حدش بيقدر يشربه كله.
اه.
ما هو طب بتقول لي اللينك فين؟ انا نسيت ابعت لهم اللينك، بعته لهم دلوقتي خلاص هم بيدخلوا اهم.
اوكي.
انا خليني اعملك كو هوست عشان خاطر يبقى عندك شيرنج بيرميشنز.
Sure.
جربي كده شوفي انت تقدري تعملي شيرنج وكده.
اه I can.
حلو أوي. طيب everybody please um, open your camera and keep it on for the entire meeting. We will start in 1 minute. I'm done with the edits here. We should be able to go live. We are already live. Okay, أندرو وحبيبة وحازم ويوسف إسماعيل. Please turn on the cameras. Okay, let me start by first, Marie, thank you so much for joining our lecture. Marie is طبعا I talked about you a lot in the lecture. I described you as the superwoman in the investment field, and because she used to head Flat Six Labs, one of the incubators that we talked about. Remember when we talked about the ecosystems, guys? Okay, she's currently an independent investment advisor collaborating with the Egyptian and regional startups. She held significant roles in many startups, the acceleration and incubation of many startups. She holds a bachelor degree in economics from Cairo University and Master of Science in financial economics from the University of Warwick. I will stop talking now and I will leave the floor for you. Today, Marie will be talking with us about the funding journey of a startup. Marie, the floor is yours.
Thank you so much. This is a lot, Yani. Thanks a lot for the amazing intro. Hi, everyone. Very, very happy to be with you today. Well, thanks a lot for doing this on Zoom, Yani, just in case the weather becomes, Yani, I don't know when we started trusting our weather people, but Yani, whatever. We're playing it safe. Very happy to be here today. I hope it's an interesting topic for me that I like to talk about, and I hope you'll also find it interesting. As I can imagine, many of you, and this is something I'm loving about the new generation, and you have an entrepreneurial mindset from a very young age. I wish I was like that, but unfortunately, the resources available today and the knowledge we have today about the entrepreneurship world and the access to so many resources and so many successful stories wasn't there يعني when I was in university back in the days. So you guys are fortunate to have access to that, and it's great that you already, many of you have developed this entrepreneurship mindset early on. So, يعني as Dr. Ahmed mentioned, I have been working within the entrepreneurial ecosystem in Egypt for a while now, and in different roles. First, managing Flat Six Labs, and during that time, obviously, I got exposed to so many businesses, so many amazing entrepreneurs, So many great stories, many of them successful today, many of them we've managed to exit our investment in them and make significant returns. So it's been a fantastic journey with Flat Six Labs. I also participated in Hona Shabab, one of the first shows nationwide that, talked about entrepreneurs and gave them the chance and the floor to express their ideas. So I got exposed through a lot of businesses and a lot of projects. Some failed, some succeeded. Throughout this journey, it is very clear that one of the hardest thing to do is to actually fundraise, raise money from other people for your business, for your idea, for your baby. So I'll walk you today كده very simply through the journey of fundraising for a startup. And the journey actually starts a bit earlier than getting to the point of fundraising. What you actually do before you go fundraise is far more important than what you do then when you actually take the decision, I'm going to fundraise for my startup. So let me share my screen, and I will apologize for the date that will show on the first screen because for some reason I couldn't find the original file, but can you guys see my screen? I'll go now to full screen.
Yes.
Great.
Yes.
Okay. 1 second. Why am I not able to flip through?
We are seeing it full screen. You don't have to do anything else.
Yeah, I'm just not
You
able
can
to
proceed.
scroll up and down. مش عارفة ليه. 1 second. But let me stop share for a second and figure out what is the issue. Okay.
لغايه ما تفجر اوت الايشو. احمد هدايه بيه، اندرو بيه، كيرولوس بيه، يوسف بيه، اسماعيل، افتحوا الكاميرات يا حبايبي. خلينا اشوف وشك كده يا كيرولوس.
For some reason, I just did. Let me try again.
دي مشكله انك الواحد بيستخدم جهاز ماك مش ويندوز كده.
لا هي دي مشكلة انه I just did an update, so there are new things probably they are changing and
It's fine.
like fortunately we can do full screen for some reason.
It is actually full screen to us. Or in my own view, I'm seeing it full
أيوة
screen.
ما هي now it's full screen but I can't scroll through, so I have to make
ولا
it.
حتى بالماوس؟
No.
سوري بالكيبورد ولا حتى بالكيبورد؟
No, I am scrolling through with the keyboard but it's not.
خلاص اوكي شيليها فول سكرين وقلبي عادي، مش هنقول لا.
Sorry يا جماعة جدا. 1 second.
انا برضه هستغل الوقت ده ان انا اخد الاتندنس بتاعهم عشان اذبح اللي ما جاش.
Okay. And it's very annoying like this, I can imagine. I don't know.
No, it's fine.
Are
It's
you
fine.
sure?
It's okay. It's okay.
طيب
Let's start.
خلاص great. So the first step in actually starting a business and starting your company is actually minimal, but it's actually a lot of work. So let's dig through. The first thing is you have to really think a lot about your idea. Usually ideas are, we come across them because we come across a particular challenge that we would like to address. So how do you do that? How do you think about the idea? Let's say you come across a certain challenge in your daily life and you decide to develop something, an idea comes to your mind. Why don't we do this to solve this problem? And it seems very reasonable to you and it's such a big problem for you. But the question you really need to ask yourself, how big is this problem for other people? So is it a huge problem for many other people like me, or is it just me who has this problem? How big is the pool of people that you can serve, basically, if you decide to develop a solution for this problem? And then let's say you did some market research, you asked people around, and you're sure that this is a huge pain for a lot of people, and you really need a solution for this. The next question becomes, are there other similar solutions in the market? So you do some research. You might find some comparable solutions that were done or were executed in other markets. So it becomes, okay, this is very interesting. This is exactly what I thought about. So let me study how those guys did it and how they executed it and what was the market reaction. How did they get this product or service to the relevant market, and how it worked for them, how much money they raised, and so on. So the very first and very important step in starting any idea or any business is to do research around this idea. So find out the size of the market that you will actually serve with this idea or product, and then what have other people done around the same space? Are there similar solutions in the market or not? Maybe there are similar solutions, but you're able to detect some defaults in this solution or in this idea or in this product, and you actually have a better idea on how to execute it and serve people better. So the first thing is to do the research for the idea. Secondly is, is who's going to execute the idea with you. So let's say you come up with a solution that is a tech-enabled solution, an application, an app, a software, or whatever. Or anything. It doesn't have to be revolving around tech, but nowadays a lot of things are revolving around tech. So who's going to execute the idea with you? It is also very likely, and this is something I came across a lot, and it's a group of friends who are together in university, in many cases working on their maybe a graduation project, and then later on they decide, they get so passionate about the project and they really believe in it and they did the research, they decide to continue working on the project and turn it into a company. So in that case, that's an easy case because you're already a team. You hopefully complement each other. So someone is taking care of the tech development. Someone is very good in business development. Someone is very good in operations and so on. So you are a team that complement each other and you're able to execute the idea. If not, it's slightly a bigger issue because you have to find other people who share the same passion, who share the same enthusiasm for the idea and who really believe in it and can complement you as a founder or as a team. لأنه at the end of the day, and you'll find this out throughout the presentation and the journey, is that what really matters is who's executing the idea. The world is full of great ideas, but it's not about finding a great idea. It's about executing that great idea. This is where all the work happens. The second is, as you can imagine, the next step is to have a clear execution plan, in the sense that these are the steps we're going to take to get to our product. So let's say first you're going to do your research, you're going to do maybe a survey in the market to gather feedback. It could start with your family and friends, your colleagues, your classmates, and then from the results of this survey, you can do some changes on the idea. You make it better. You change things about it. And then second, we're gonna develop the actual product, whether it's a tech product, whether it's a hardware that you need to go and find out where you can develop this product and so on. And then you're gonna take it to market, for example, and then you're gonna start fundraising, whatever the execution plan. You just have an initial idea on how you are going to actually get from an idea to an actual product or service and a business. And then the final thing is to think, okay, this is the amount of money I need in order to execute this idea. And again, all these things are not necessarily going to be very clear from day one, and that's totally fine. It's a journey, and as you go, you're learning throughout the journey. So nothing is going to be all clear from day one. But this is sort of initially what you need to have when you start thinking about your idea. Now, second, let's say you did all the things we mentioned above. So you have an idea, you have a solution in mind, you did your research, you started putting a plan, you have an initial team to start executing. The next thing you do is you need to start talking to other people about the idea, okay? In what sense and why? Because it helps you a lot to benefit from the experiences of other people who've been there, done that. So you need to start networking, okay? And this also serves the purpose later on of you trying to fundraise for your idea. So you start networking, you start reaching out to mentors, to people, possibly in that industry, to maybe older people within your network that you respect, that have had, successful careers, are successful business people. So you actually start talking to them and tell them, listen, I have this idea, what's your feedback? It's so important to get feedback. You can talk to other entrepreneurs, more older, more accomplished entrepreneurs that have been through the entrepreneurship journey. I'm sure they have a lot of things to share with you. And the benefit of doing all this is to try and, one, shorten the time it takes you to actually get from idea to execution to hopefully to success, and also helps you avoid a lot of initial mistakes that anyone would do if they are starting off and they don't have the right guidance or the right support. So you should start networking. You should start engaging mentors or people you trust within your community that you can get feedback from. And also, يعني activate your filter. Okay, some things might make sense, some things might not make sense initially, but might make sense later. Some things might never make sense. So this is where you activate your sensors and, يعني keep the persistence for your idea, even if you get some not very constructive feedback, let's call it that way. Also very important to, so go ahead. اتفضل يا دكتور. You're on mute. Can you
I have a question. So
Sure.
because nobody is asking questions, so I will ask on their behalf. You are, as you just said, part of the networking is to find mentors. Usually you start with someone you trust. Where also can I find mentors?
That's a very good question. That's why the next thing I was going to mention is you start attending startup events. You possibly, if you have the time and the capacity, apply to incubators and accelerators, and it's really worth defining the difference between incubators and accelerators. But this is where you get access to a huge pool of mentors without any effort, because basically that incubator or accelerator team will assess your business, will assess your needs as a team, and then they will direct you to the right set of mentors that can possibly help you. In general, when you start networking and get the word out there that you have an idea in that particular space, you'll find your network recommending people here and there. But if you want, like, the easier way is to start attending startup events. We have Rise Up, we have Techni, we have a couple of interesting events that happen across Egypt. Start attending some of the demo days of these demo days, basically the event that happens at the end of an incubation cycle or an acceleration cycle, where the participating startups get to pitch their ideas in front of an audience. This is a huge learning experience for anyone who's thinking about starting something, because you get to see how ideas are pitched, how the team complements each other. And again, you'll meet a lot of mentors there and a lot of, other entrepreneurs that you can, start networking with.
So nobody will steal my idea?
No, I mean, again, like we said initially, and this is the core of this whole thing, ideas are for everyone. You can go on ChatGPT and get all sorts of ideas you want, but it's all about execution. So they could steal the idea, but do they have the means to execute it or not? This is another question, a whole other question. So don't worry too much about, and you don't have to go very specific, You can just say that I am looking at this space and I identify a particular problem and I'm thinking of developing a solution around it. You can stop there. You can always برضو keep things short and sweet. Finally, it's very good to keep your contact list fresh and engaged, and we will highlight later how this really helps when you start raising money, because it's so important to keep engaging people. So let's say if you met someone very interesting during Rise Up, for example, and you shared some highlights about your idea, and they gave you very interesting feedback, get their contacts, send them a message or an email every now and then. Listen, I've done so and so in the idea that I discussed, and try to get feedback. Maybe you meet them the year after in the same event or in another event. Keep that list always fresh and engaged. It's very, very important. So once you've done the reach, you start identifying certain entities that you want to pitch to. And here it's worth, because I forgot in the previous slide to explain the difference between incubators and accelerators. Okay. Incubators, Dr. Ahmed, you have another question?
No, not a question. They will tell you what's the difference between them.
All right, go for it.
So you pick a name and force them to answer.
I pick a name. Okay, I'll pick Yassine because he was one of the first people in. So you're being rewarded or punished. Depends on how you see it.
Okay. ماشي. Incubators are for like businesses at the very start, to take them along and they get them going. Accelerators are like خلاص business already started and they worked a few, and then they just have to take them to that big push, that fast push to get to another stage.
Amazing, perfect. I'll just add very few things in the if the world is right and if things are being done right, as you rightfully said, incubators are like from the name, an incubator or a hadina. So they take the infant from the very, very beginning and they help that infant grows into a human being that is full and complete. Those efforts usually should be only led by the government because there is no money return on incubators. They don't really make money, right? So they are usually led by development agencies or governments whose end goal is to develop the ecosystem and help businesses, start and so on. So in general, احنا مثلا at Plastics Labs, when we ran an incubator program, it was managed by development money coming from the United Kingdom to Egypt to help develop the startup ecosystem in Egypt. It was a grant. It wasn't the UK is not looking for a money return on it. Accelerators, on the other hand, are institutional investors, so they are looking to make money. That's why they take the startup through a 4-month or a 6-month or a 3-month program designed to help them accelerate their businesses, basically, and they actually invest with them. So an calls itself an accelerator without making a cash investment is not an accelerator. It becomes an incubator. Incubators don't invest money. There could be, at the end of the incubation cycle, there could be like a grant or a prize for the top performers. I think the AUC VLab model is like that. They run a fantastic program, but there is no cash investment. Their investment is non-cash, which is basically the program. And then at the end, they used to do like top 3 businesses, they get some sort of a cash prize. So the accelerator invests money, okay? And they become a shareholder. They become a partner to your company. And basically, they only make money, physical money or actual cash return, when they make an exit from that investment, okay? So it is very important when you apply to different incubators or accelerators, it is very important to understand how you pitch. Let's take a question from Ziad. Go ahead.
Hello, thank you for the presentation so far. I want to ask a question. If I have an idea, it is implemented, but it's not fully implemented yet. I cannot call it a working business yet. So do I have to be established already and 100% to the market for me to get help? Well, is it fine to have that help at an earlier stage before it's fully established as a business?
Thank you for the question. Very good question. In fact, you need more help at the early stages when it's still an idea, when it's still being developed, because this is where maybe you're lost the most, or you need the bigger help. Once you've actually implemented the idea and you have a product, of course, there are more learnings and you need more support, but you actually need bigger support at the beginning. So on the contrary, you should get help as soon as you can, because you always have questions. You always have, 2 ways to go and you need to choose between them. And this is exactly where incubators come in place. They come in, they assess those early stage businesses, especially at the stage where you're not yet ready to actually fundraise. You're not ready to take money, because again, this is something that we'll discuss throughout. It is very important to raise money when you're ready to raise money. Otherwise, and when you have a clear plan, otherwise you just take the money and then spend it on all the wrong places and the business is not going to get anywhere. So on the contrary, if you're at that stage, you can apply to an incubator. They'll get you the help you need. They'll get you the mentors that are, suitable for your business, and they'll answer hopefully all the questions that you have. So get the help whenever you can. You don't need to be fully established. If you're going to an accelerator, obviously depends on the mandate of each accelerator, but usually they require businesses that already have an MVP, have a minimum viable product, so they have some sort of form of a product or ready to go to market, so at a slightly more advanced stage. Okay. So you're welcome. So let's get to the pitching. So let's say you are pitching to an incubator or an accelerator. We'll get, since we're talking about fundraising, we'll get to the point where you're pitching to potentially an institutional investor. These are some of the things that should and have to be, these are the minimal things that need to be in your presentation. The first thing is defining the market opportunity. What does market opportunity mean? Remember when we said in the beginning, you have to research and find out how big is this market you're addressing? This translates immediately to a market opportunity. I can serve millions of people because millions of people are suffering from this issue or need this solution to solve a particular problem or have such a big pain that I need to solve. So this here becomes your opportunity. This is the market opportunity for this business because there is a big market that it can address and solve a problem for. Second, you go into explaining the product and service, explaining how this product or how this service is solving a big problem for a large number of people. What is the problem and how are you solving it? So you spend a couple of slides explaining your product. If it's an application, you can potentially put some, pictures or images on how that application will look like. If it's a software, what's the journey of going through and using the software and so on. So you spend a couple of slides explaining this product or service in a very simple way. And you have to always think that while you totally understand and you're totally invested in your idea and your product, the investor is not necessarily that interested yet or that invested, or maybe they don't have expertise in that particular area. So you need to go very, very simple. Third thing is, which is something we also talked about, is competition. What are the competing products and services? Because basically a similar product is addressing the same market. So it's a competition. It's eating part of the pie that you're trying to get. So it is very important to clearly explain, okay, this is my product and these are the other similar products that we have in the market. And let me explain to you how my product is different. So the next thing is the unique selling proposition, USP. What is unique about my product or service versus other products and services that exist in the market? It could also be versus other products that exist in the US or in Silicon Valley. And again, there is a lot of work here that needs to go into localizing some of these products and services, because our market is different, our language is different, our culture is different, our market needs are different, our market intelligence is different, and so on. And then, guys, stop me anytime you want. Please don't hesitate to ask any questions. And then,
and please focus with Marie, because these steps for pitching, these are being taught to you right now. I will not talk about them again. Marie is talking about them right now. So remember.
The next thing you need to talk about is customer acquisition. What does that mean? Let's say you've identified that you have a particular market that you want to address, and you've explained the product and how unique your product is versus other products. Now, the next question that comes to the investor is, how are you going to acquire these customers, right? How are you going to reach this customer? How are you going to tell them about your product or service? So there could be several ways, obviously, depending on the type of the product. You could say, I'm going to do a social marketing campaign. You could say, I'm going to do direct sales. For example, if you're selling a software to businesses, so you're going to identify a list of businesses that you want to target, and then you're going to go either send cold emails, you find someone you know within these organizations and try to do a sales pitch and so on. So how are you going to acquire your customer, which is a very, very important part of any business, because you could have the most amazing product, but you're not able to reach your right customer because you don't have the right customer acquisition metrics and techniques. And then the interesting part comes, which is an ask. Okay, an ask means how much money you need, what sort of help you need. And the ask is not necessarily only a financial ask. So basically here you've explained, you've taken the investor through your idea, your solution, you've explained your product, you've explained how unique your product is, you've explained how you're going to acquire your customers, and then you tell them, listen, in order to do all this, I need to raise X amount of money, or I need access to X amount of, or these institutions. In some cases, if you're developing maybe a financial product, you need access to regulators to get licensed. You need access to banks to partner with them. You need access to insurance companies to partner with them, whatever it is. Again, it really depends on who your audience is and what sort of value add you could get out of them. And one of the main things I used to always tell the entrepreneurs, the investor should not only give you money. If an investor is only giving you money, he's not a good investor, or she's not a good investor. The non-cash actually investment in you by the investors is much bigger and much more valuable, because usually those investors are either successful financial people, people in finance, so they have access to a lot of financial resources that they can should help you get access to, or they are either also seasoned professionals in their fields, so they have access, they have a huge network, they have a long experience in a particular space, so they can give you access to companies or certain markets potentially as well. So usually they have a lot to share, and they have a lot of resources and a lot of value add. And finally, you tell the investor, listen, I'm going to do all this with this amazing team. This is the amazing team that's going to execute this idea, and you share a little bit about your team. Okay. You might have heard this term before. It's called elevator pitch. Okay. Elevator pitch, because it's supposed to be very quick. In 1.5 minutes, you get me intrigued as an investor or someone listening to your pitch, and I'm interested to know more. But at the same time, I don't have time or patience to spend too much time as you tell me about your idea. So it's called
Again, how many time? How many minutes?
1.5 to 2 minutes. It's
So
going to be
I'm giving them 15 minutes to talk. So maybe I'm super generous.
You are.
because in 1 minute, if I did not quote your attention, Marie, what will you do? You just ignore me.
Yeah, exactly. So you need to know how to attract the investor's interest or the person you're speaking to's interest in a very short period of time, because most likely the investors are, especially in big events, they are bombarded by thousands of people who all want to pitch their ideas because, you know, those guys have money. So we want to get some of their money. So let me pitch the idea. Go ahead, Habiba. Let's hear from you.
I just wanted to ask, the 1.5 minute to 2 minutes, it's all like including what they want, the resources, the questions, the money they're asking, and the entire pitch to all fit in 1.5 minutes?
No, these are exactly the 4 things that I'm mentioning here in this slide that should go into an elevator pitch. So you should quickly explain your idea. And this is something that you have to rehearse. Like, it's not, you have to learn how to actually do the elevator pitch, and you're going to keep getting better at it. So these are the 4 main components. What is my product? Why is it unique? Because usually when you tell someone about your product, the first thing that comes to your mind, I've seen another similar product. I've seen this, I've seen that. So you need to hit them right away with how unique is your product, how you're going to get access to your customers, and this is the team that's executing. So just these 4 things as quickly as possible and as intriguing as possible. And again, the way you tell your story and the way you tell these 4 things is also an interesting that you can learn over time. And you can look up also a lot of videos on YouTube and on all sorts of resources on elevator pitches. We could also relate to Shark Tank if you guys are watching, but hopefully the American version, not the Egyptian version, because it sucks. In the American version, you can really learn how those guys are so good at, you know, doing those very quick pitches with, you know, unique words, unique expressions that actually attracts the shark's attention. So the whole idea of the elevator pitch is not to ask for anything, is not to tell them what you need from them, is to just get them intrigued. And then they will, if they are intrigued, if you manage to do that, they will be asking the questions, and then they will give you the time. Did I answer your question, Habiba?
Yes, yes.
Great.
Thank you.
I have a question.
Sure.
How should I مثلا in a minute or 2 should I يعني grab the attention of people who مثلا they're not expertise in my project. يعني أنا for instance I'm doing حاجة ليها علاقة بconstruction، فهو مثلا ال entrepreneurs اللي قاعدين قدامي they won't have enough background على construction stuff، فأنا كده ولا كده they will lose the interest.
Not really, because okay, you might think they don't work in construction, but if you're solving a real pain for people in construction, then you have to start with the pain. Do you know that people in construction have the following problems, 1, 2, 3, 4, and that no one has thought about a solution for that? Let me tell you my solution. You have to intrigue them. You have to intrigue them usually either with how unique your product is, if it's a common product that we've, you know, seen similar versions of, or quickly explain what is the pain and how you're solving it. And trust me, you'll get their attention even if they are not expertise in the space. But mind you, also you're probably pitching to investors or mentors, so they've probably seen similar, you know, startups or similar businesses. They may not be experts or work in the construction space. However, they were probably exposed in a way or another. Okay.
Thank you.
Sure. Let's move on. Okay. So, sorry, I lost something. 1 second. Yeah, here it is. So let's talk about the things you need to have ready. Yeah, this is something that I've seen a lot with entrepreneurs who are doing 4 and 5 minute presentations. So not like an elevator pitch or they have all the time and everything, but then they fail to have some numbers off the top of their mind, off the top of their head. Like when I ask the number, it's there. So these are some of the very important numbers. Yani this is a bit advanced maybe for a business that's been already operational and it's been a couple of months or a year or a couple of years. But this is a bit more advanced. But again, it is something, and there are some of the numbers that still a very early stage entrepreneur should be able to answer. Like, for example, an investor could ask you, how big is this market? And what sort of market share you think you can get out of this market, for example. This could be something that once you've pitched your idea, this is the question that comes to their mind if you haven't already highlighted it in your presentation, or if like it's a pitch on the go, so they haven't seen the slides. So you need to have some numbers off the top of your head. So some of these numbers are, and you'll hear those expressions a lot if you listen to pitches or if you have some of those conversations. The first one is called burn rate. What does burn rate mean? Burn rate means how much cash this business is burning every month or spending every month. So basically, what is your total operational expense that is recurring on a monthly level or on a monthly basis or yearly basis? The reason they ask this question is they want to know, let's say if you have $100,000 at the bank or 100,000 pounds in the bank, and you burn every month X, this means that this is your runway. So runway is the second thing, which is cash on hand divided by the burn rate, or it's a function of both things, right? So if your burn rate is 100K and you have 100K in the bank, this means in 1 month you will shut down because you have no more money to keep running the business. Okay, you got the idea? So this is the idea of the burn rate and the runway.
شهد. Okay, لا شهد الأول.
Oh yes, I wanted to ask, هو أنا within the 2 minutes اللي احنا بنتكلم عليهم I start talking about numbers already ولا I talk about them when I'm asked؟
لا خلاص احنا عدينا الاليفيتر بيتش. يعني انت هنا you're doing a presentation عادي and you have your time and they're asking you questions like we said.
Okay, but within the 2 minutes I don't talk about numbers ولا الحاجات دي خالص.
يعني you need to grab their attention. So it depends on your business, or it depends on the idea that you are trying to pitch. If it's about numbers, then you have to mention the numbers. If it's a product where you need to highlight that this is actually a big market, then you need to mention the market size or the size of the market. You could also throw in a number, and we expect this business to sell in X millions of pounds every year. You could throw in whatever intrigues your investor. Okay. If it's some number, but don't overwhelm them with numbers, because people, to focus and concentrate with numbers, they need to, be sitting down and looking at something. Don't overwhelm them, but you can throw 1 or 2 numbers that actually get people, all right, okay, this is interesting. This is a big market. This could be, a big business.
Yes, okay.
كان في حد تاني رفع ايده.
Andrew, do you have a question?
هي مش عندي سؤال، بس كنت هجاوب عليها.
sure please.
إنه في ال 2 minutes لازم بنبدأ بالبروبلم بهوك، يعني بنقول قد ايه مشكلة كبيرة، ونحاول نقنع الانفستر انه دي مشكلة حقيقية، وانه السولوشن بتاعتنا هي الحل الوحيد يعني.
بالظبط. دكتور أحمد.
Thank you, Andrew. Martina, by the way, is a psychology major, and Yusuf Ismail, by the way, is also a double major also in psychology. So, Martina.
We said that this is if we're operational right now. If we're not operational yet, يعني what should we include, أو يعني how should this go?
Sure. بالنسبة للإليفيتر بيتش ولا بالنسبة للنمبرز؟
لا النمبرز.
Okay. بالنسبة للnumbers, like I said in the beginning, maybe beginning of this slide, not the very beginning, if you're a very early stage company and you're still like not yet operational, but supposedly you've done the research on the size of the market, supposedly you've done some running of some numbers, مش هنقول full financial model, but like running some numbers and trying to get an estimate of how big can this business go in 2 or 3 years. And I could sell مثلا first year for 5 million, then second year for 10 million, and so on. So if you've done this exercise, you can throw in these 2 numbers, like the market, or you need to have these numbers off the top of your head in case you're asked: the market size and maybe how big this business can go in terms of revenue or sales in a couple of years. if you have not yet done the numbers, but at least you know that you can try to show that you've done the research and you know that it's a big market. We haven't done the math yet, but you know that it's a big market because of 1, 2, 3, 4. We know that this is a huge pain because of 1, 2, 3, 4. So you need to get them intrigued a little bit. Yani without the numbers, if you haven't done, if you've done, then it's even better because these are some of the numbers you'll be asked. How big is this market? How big can this business go, basically? Another metric that usually are, again, investors ask, but again, for more advanced or operational business, something called the customer acquisition cost. Remember how we spoke about the customer acquisition, how you acquire your customers being a very important topic and a very important thing that you have to think about and you have to talk about when you pitch your ideas. There is also a cost to acquiring customers that has to make sense relative to the actual revenue you get out of this customer. So this is what this metric calculates. How much are you spending to get one customer? And I've come across a lot of, I'm sure you all are familiar with Rabbit and InstaShop, especially Rabbit, they do a lot of discounts and a lot of coupons and a lot of, and the question here becomes, are they making money off my sale with this coupon or not? So this is what customer acquisition cost is. So how much you spend to get a customer should make sense relative to the revenue that you actually get or the sale that you actually complete from spending this money to get the customer. And then they would also ask about revenues to date, and it becomes, it's very odd when I ask an entrepreneur how much money have you made as a business, and they don't have the number. Like something is wrong if you don't know how much, because this is the ultimate goal of any business is to sell and make money. So this number has to be ready in your head. If you've already gone to market with your product and you're selling or a product or a service, so there is a subscription revenue or there is a sales revenue, you have to have this number ready. And finally, forecasted revenue is, again, something like we mentioned, any investor would be interested to know because they want to know if I invest today, how big can this business go? Okay. Sometimes you have to put yourself in the shoes of the investor. They want to know how and when they can exit the business and how can they make money and recover the investment they've put with you. So they want to know how big can this business go in a couple of years, and this will reflect on the valuation and so on, which we'll get to. Quickly, there are two forms of presentation mode. There is of pitches or pitch decks. There is one called presentation mode and one called reading mode. Presentation mode is something similar to what I'm showing you today. It's the slide has some visuals and few and very little text because I'm speaking over it. So I don't need to put everything inside, and you guys should be looking at me as well as looking at the slide. But let's say you're going to send the presentation to an investor. So you met an investor at Rise Up and they like what you were talking about and they want to know more. Then you send them a reading mode presentation, which will have, you can put all the details you want. It can be a 20-slide deck, and it can have an appendix that is also 10 pages long. Because then they will open it when they have the time. They will open it when they can concentrate and read through it. And you're not going to be there to speak over the slides. So everything has to be in there. Let's take the question from Farah and then Habiba. Go ahead, Farah.
let's say I'm still starting my business. I don't have any revenues. if they asked for this, what should I say? I'm still asking, let's say, for مش عارفة capital أو حاجة.
That's totally fine. That's totally normal, completely. All you need to do is, this is our product, okay? This is our plan to go to market. And then you need to do some work on the numbers to give them an idea about how much you can sell for in the first year and the second year. So you don't have to have previous revenues, but you definitely have forecasted revenues because investors invest in the future. They don't invest now. So they will like you, they like your idea, they think you can execute on the idea, but they want to see some numbers. And this is part of you building the vision and the mission for this business. So it's totally fine if you don't have previous revenues, but just try to do some work to show forecasted revenue.
Thank you.
Sure. Habiba, go ahead.
For the presentation mode versus the reading mode,
Yeah.
you mean like the style of the presentation where one has more pictures and the other has more like words and sentences?
Exactly.
But I feel like for the presentation mode, even when in person, not only online, like some words in the background would be like better to like reassure or like confirm the information because it's a new idea, it's a pitch and a startup. So even when I'm saying it, I'd still like to write it in the background or like in anywhere on the picture so that they can like go back to it and like remember it. Yeah. فاهم قصدي؟
Sure. But you can't have too much text. You can have some text, like I have in those slides. There is some text, there is some content. But if you overcrowd it, they will be distracted between looking at you and listening to you and between looking at the slide. The idea when you're doing the presentation, you don't want them to be distracted with anything but you. Okay?
Yeah.
You're the core of the business. They're going to invest in you. You want to get their attention, their trust. And you can put some visuals, you can put some information on the slides, but just the idea is don't distract them too much with a lot of text and a lot of, even with a lot of visuals, you want them to concentrate with you. In
Okay.
the mode, go the other way around. You're not there, so you want the text and the visuals to speak for yourself. So you put everything there. Dr. Ahmed, احنا how much time do we have عشان بس to keep...
we theoretically we have forever because يعني we are on Zoom بس يعني عشان خاطر to be merciful we have half hour left يعني
Okay.
you have time. 30
Okay, great.
minutes.
Okay.
But I have one note, guys, and I will not repeat that again. Your presentation will be in a reading mode, not a presentation mode, because I want to see the text. I want to know that you actually did the job. Okay.
Great. So let's dig a bit deeper into the process, okay? So when you let's say you've been to a startup event, you've seen an investor, you did maybe some sort of an elevator pitch, and then they invited you to actually do a presentation, like we see here in that visual. The lady's there, she's explaining her business, and there are some old people listening to her, but they have the money, so you're gonna have to go through that. So the idea here is to present the business in a very clear and transparent manner. You don't have to speak vaguely. You don't have to hide things. The investor is going to be your partner. If they are the right investors, they have to have the partnership mode in them, because it's not about I'm superior because I'm giving you the money. No, you're going to partner with me. You're going to be part of this journey with the good and the bad. So you have to include them and share with them the journey, share with them the goods and the bads of the journey. So you just explain the product and your business in a very simple and transparent manner. It's very important to build relationships. Fundraising is about building relationships. I can't express how important it is to build a relationship. What does that mean? Sometimes you'll go pitch an idea and then you have this, you guys know Simon from The Voice, like, is it The Voice? Simon is the bad cop. He's always rough, and he sometimes give negative feedback, and he's very tough. So you're always going to have a Simon. So all you need to do is take a deep breath, try to take in the negative feedback and work with it, okay? You can't get upset. You can't, start sweating. You can't start responding in a rude manner. You're gonna know, you have to know that you're gonna meet these people in different presentation, and you just have to deal with it. It's fine. So some of it will be constructive feedback, some of it will not. You have to try and absorb it and work with it. But at the end of the day, remember that it's about building a relationship. And believe it or not, some of those annoying investors at the beginning end up being the best investor you're going to have, and they actually push you through. And once they build a trust and a bond with you, they are not as nasty anymore. In fact, they are the biggest supporters. So again, it's about building that relationship.
Yes, Marie, I just want to reiterate, yes, that's very true. The investor, if you are presenting in front of someone, and that someone starts bothering you with many questions and challenging you, it actually means that this person cares. And
Exactly.
usually, if you ask this person for advice, they will give you so very good advice.
Very true. You need to also know that sometimes there are a lot of egos involved. So sometimes people feel that comfortable when they are, challenging you and asking questions. They feel more superior. You just have to deal with that and work with it. It's fine. We'll give you all the ego in the world and all the respect. But like Dr. Ahmed said, at the end of the day, this probably means they care. They like what you're talking about, and that's why they're challenging. If they don't care, they won't care to challenge you or ask questions, or if they're not interested. But they actually are challenging you to see how far you can go and how well you've studied your business. And again, at the end of the day, you're not going to have the right answers all the time at all. Especially if you're an early stage business, you're still learning through, you're still going through the early stages of the journey. It's totally fine if you don't have an answer to the question. You just say, that's a very interesting question, but I haven't done the research on that. Let me get back to you on that. It's a very expected and very common answer, and it doesn't mean you haven't done your work. It means that this is actually the purpose of doing these pitches and these presentations and talking to different people, is that they open up, you know, different topics and different areas of the business that you haven't thought about. So this is exactly what this is for. You just say, this is actually a very interesting thing that I need to look into. Thank you for the question. And you get to the next question. Ask for mentorship and advice. If they challenge you in a particular area and you don't have the answer, try to ask them back, what would you do? How would you solve this? What have you seen in other similar successful businesses? So always, and trust me, this serves as the best icebreaker when they actually slightly feed your vulnerability. At the end of the day, we're human beings. When they feel that they can help and they can add value, it always makes everyone feel better about themselves. And they actually start giving a lot. When they actually feel that, oh, you actually asked for my help. Okay, I'm going to give you my help. I'm going to give you my advice and mentorship. And again, build the relationship. When you keep asking for their help and you get feedback, it helps build the relationship. Like we said, take all the feedback, regroup with your team, reassess, think about the questions that were raised, the things that they challenge you about, and so on. Follow up with your investors and request the feedback. I used to tell my entrepreneurs, it's very useful to develop like a one-pager update that you can, and so many formats available online in a nice way with some visuals, simple updates. Like, for example, we told you that we are about to sign this contract. We actually signed the contract and now we started implementing. We've hired that person. We've actually finished developing that part of the product, whatever is the update. And just send it to them by email, by WhatsApp, whatever. In many cases, it could be 1 month they don't read, the next month they read, and so on. But it's good to one time when you keep sending, you know, one time they will open the email and read the update and they will remember you, and potentially the time is right for them to invest at the time. Keep your investor list, like we said, informed. So just keep the list updated and try to stay in their minds, you know, because they are, like I said, bombarded with a lot of pitches, a lot of people coming and asking for money. So the ones who stick out are the ones who are going to keep their ideas and themselves fresh in the minds of the investor. Now, this next thing is who you pitch to is so important. Why is it so important? Because it saves your time, it saves the investor time, and increases the probability of them actually hopefully investing in your business. Okay, pitch to the right people. What does that mean? Again, this is where research comes into play. So let's say you meet an investor who is associated with a particular fund or a particular company. All you need to do is to do some Google research on, or ask ChatGPT these days, about that entity and find out how big is their fund, who do they invest in, do they invest in early stage companies, do they invest in later stage companies, what's their ticket size, what are other companies they've invested in. This will help you very much limit and shorten the list of investors that you want to target. There is no point in, if you're an early stage investor, to go speak to a late stage investor, because he's not going to be interested, right? Simply, he cannot, by mandate, they cannot invest in early stage companies, and vice versa. So it's always important to pitch the right people, even if you're pitching to people within your network or within your circle of friends. Again, this also applies. And don't waste your time or other people's time if they are not the right people for you at that stage. You need to know what the investor can bring to the table. And also, this is something you can find out once you've done some research about them. Because if they invested in similar businesses, potentially in other markets, then they have a lot of value adds in that particular industry that they can help you with. If they've invested in other markets, this means they can potentially give you access to these other markets and help you grow your business outside your borders, and so on. So again, remember, it is not just cash. If the investor is only bringing cash, then he's a bad investor. We want an investor who can bring a lot more to the table. They could just be good mentors, and you'll benefit a lot from their mentorship. So again, it doesn't have to be something super material. They could be, for example, you're developing a fintech and they are ex-bankers. So they have a lot of network within the banking space or with the regulators and so on. So find out a little bit how much that investor can bring to the table. Again, it is very useful to join an accelerator or incubator in the early stages, because they will do a lot of that on your behalf. They will give you access to a good network of mentors and investors. They will help you find the right people that suit your startup stage and industry and so on. They will teach you how to pitch your business and do the elevator pitch and everything. They will help you with the numbers. So if you're very early stage and you feel slightly lost and you need the help, find out about incubators and accelerators and try to join them. Remember, like we said, it's a long-term relationship. It takes a very long time to actually raise the money. And once you raise the money, you're always raising money, hopefully, if the business is going well and it's growing and it's scaling. So it is very important to remember that. It's all about the relationships. And it's important to maintain that really. You know, any relationship in our lives requires a lot of work. So we have to put in the work when it comes to building that relationship. I'll get you, Habiba. Let me just go through these 3 things. It is very important not to be too cagey, meaning you're too protective of your of details about the business and how you're doing it. Remember, again, it's about execution. And remember that particularly investors, they are not in the business of executing ideas. It's not what they do. So even if you sit for hours and tell them the ins and outs of how you've built that product and how you plan to sell it, they're not going to do and they're not going to go and take that and execute the idea because they are not in the business of doing that. Their business, as per their mandate from the investors who gave them the money to invest in you, is to invest only. Okay, so don't insist on a non-disclosure agreement. Yani be too cagey on your idea. Just be transparent and keep it smooth and easy. Also, very important to show the vulnerability. Yani just show that you're a human being. You need help. There are areas where you're very good at, and there are areas where you need their help and their support. Go ahead, Habib.
خلاص, you answered my question. I was gonna ask about the show your vulnerability part in the previous slide because I didn't really understand.
Sure. It's very, very important. It's one of the things that really helps build that relationship and bond. I can't tell you how many times I've listened to or attended startup pitches for those very, cocky, like founders who feel like they know it all and they don't need anyone's help. And we have the perfect product and the perfect business. Don't give that vibe because you just kill, the relationship right from the get-go. I'm not saying you come off as weak or unprepared or anything. No, showing vulnerability means you're a human being. So there's absolutely nothing wrong with that. There's absolutely nothing wrong with asking for help and getting the advice. I always tell my entrepreneurs, you will get as much help and work from me as much as you demand of me. I used to get people, I manage a portfolio of 70 companies. So 70 different teams, and I sat on the board of the 70 companies. So people used to ask me, how are you doing it? And I told them very simply, the ones who demand more of my time and my help are the ones who get more help and more time. So you have to do it. It's on you to get as much as possible and suck it out of the investor as you can.
And this is a generic rule in life,
yes.
Not just investments.
Absolutely.
People will give you attention when you ask for it.
Absolutely.
Just that.
Ahmad, please go ahead.
I don't understand قوي ال NDA. يعني what's the purpose of it? Why would I want to actually have an NDA?
You don't want to have NDA هو non-disclosure agreement. So these are typical documents that both parties sign when they want to protect their information. So unfortunately, some founders, when they go speak to investors or to, let's say they're trying to do a partnership with a particular company, let's sign a non-disclosure agreement because I'm super protective of my idea and how I'm going to execute it. So I don't want you to get the information out. So the problem is it makes people a bit, they take a step back and like, why are they so, why are they so protective? Why are they so edgy? It just complicates a very early stage relationship that doesn't require that. There is absolutely no need. Like we said, it's all about execution. It's not about at all someone copying your idea or even the way you say you're going to execute it. The actual execution on the ground is what really matters. And investors understand that. Plus something very important.
Okay, بس
Go ahead.
sorry, بس أنا عندي سؤال بس. If مثلا I have a product وكده كده I have like a patent for it أو حاجة, why would I need an NDA مثلا?
If you have the patent, but usually patents come at a much later stage. We're talking about someone very early stage who have an idea and an idea about executing it. And they're usually to have the patent, you have to have the actual product. We're talking about the earlier stages when you're still developing a product and you're so worried about your secret sauce. Let's put it that way. Something else I wanted to highlight, because again, at Flat Six Labs, we used to invest as shareholders, not as debt holders or anything. So we used to make the startup sign a very long and complicated legal document. So they were very, very scared. But we used to get our lawyers to sit with them and explain every certain clause and try to reassure them that we are not trying to screw them over or anything. And something I simply used to tell them after the lawyers finished, guys, listen, if we did one thing back to one startup, no other startup will ever come and apply to Flat Six Labs. So investors have a reputation to protect. If they take your idea and they even tell another startup in the same space the information, and you can pinpoint it to them, they are done. They're ruined. They won't be able to raise money again. They will not be able to operate. So remember that. Yani, this is your safety net. They cannot screw you over. I told them this document is because we don't want you to screw us. Because at the end of the day, imagine as an investor, I give you 100% of the capital, but I only take 10% of the company. You own the 90%. So if anyone is going to screw the other over, it's the entrepreneur screwing the investor over. But we used to tell them, don't worry, we are not in the business at all of, doing this. So again, this confirms that you shouldn't be too cagey or worried about signing an NDA. Okay. Now we come to the interesting part, okay, negotiations. So let's say that you pitch your business to the right investor and they are interested, and you build your interested for the business, and you got to meet the investor and sit and do a long presentation and everything. The problem is sometimes startups are too worried about valuations. You guys know what valuation means, right? I'm sure you've done that exercise. So the idea that I'm trying to get through here.
Please, Marie, what is valuation?
Okay, valuation is how much this business is worth, okay? And it's usually a function of how big is the market opportunity, how efficient, how complementary the team is that's executing it, and how big can this business go in the following years. And this is the value. Let's say if we're talking about stocks in the market, the valuation of a company is basically a function of the number of shares and the value of the share. When you multiply them together, this is the value of the company in the market. Okay, this is valuation. Go ahead. Did you have a question from Jana?
Yes, I just wanted to answer the question of what is valuation, but you did.
Please do. We want to hear it from you.
I was gonna say it's the real value of the company and the value behind its profits and its assets and everything that the company carries.
Bravo. Fantastic. This is the perfect answer. Much better than the one I said. Bravo, Jan. So in the beginning, all you want to do is actually get your product to market, is be able to get the money to finish developing your product and go to market and start making revenues or sales, okay? Valuation is not important at all in the beginning, but this doesn't mean, obviously, you get a very bad deal from the investor, because some investors are not ethical enough and they want to take, like the things we see in Shark Tank every time. The investors who take 50% of the company, this is wrong. Don't do that. Because simply a rule of thumb in the fundraising world, okay, that investors think about, particularly in the tech space, is that if the founders own less than 50% of the company, they have less incentive to actually grow this business. Halas, it's not theirs anymore, it's someone else's. So they'll have some contribution, but it's not going to be the same. Okay, so you want to get a good deal, but the thing is, don't be too rigid about valuations. If it's 15% instead of 10, instead of 12 or 10%, it's okay. Okay, because it's more important for you to get the money and actually get a bit, develop a business, because in the future, when you actually do that, the valuation is going to be much bigger and you're going to make up what you thought you lost in valuation later on. Okay. So just keep that in mind in the very, very early stages, in the very first round you're trying to raise. Go over the assumptions that you've built in your model in a very subjective manner and listen, get feedback, and explain to them how you arrived at the value of the company. So like Jana said, all the different formulas or all the different factors that go into this valuation. Just explain it in a very simple way, and consider the value of the equity you are giving up. So the valuation is a function, like we said, a price and shares. So what is the price of the share? Or how much shares are you giving up of your company? So initially, as a team, you start with 100% shares, okay? And then as you get investors who put capital in the company, they take some of that equity that you own, okay? So it is very important that you preserve or save that equity for as long as you can. Like we said, if you lose 50% of the company, it doesn't feel like your company anymore. You lose the incentive to keep working with the same, enthusiasm and energy. So the equity you own in the company is very precious. So you only give up equity for money that you really need, and for a lot of value add from the investor that, again, it's up to you to get out of them. Like we said, remember, in the very early stages, the money is more important than the valuation. You will make up the valuation later. You will be able to get to the valuation that you think your business deserves later on. But what's important now in the early stages is to actually get the money, okay? And again, to avoid a lot of frustrations, and the people who study psychology here can help us with that, it is very important to understand that the deal is not done until the money hits your bank account, not even until you sign the agreement with the investor. Because I've seen a lot of entrepreneurs get super frustrated when they meet investors and they feel like things are going great, and then the investor doesn't come through, or even when they sign documents and then for one reason or another in the due diligence process, the investor decides not to go through. So don't celebrate until the money hits your bank account. This is the golden rule. Again, I think this is I have a couple more slides, but something that is very important, and we said multiple times across this presentation, people are way more important than ideas. So remember that it's all about you. It's all about the team executing the idea, not about the idea itself. The idea, of course, is great. We can come up with 1,000 of great ideas all together now, today's session. But effectively, what really matters is the team that is going to execute this idea. Now, a lot of people get so consumed with actually raising money, but then they don't think what's going to happen post getting the investment, okay? It's actually a big deal to get money from someone else, right? Because this is a huge responsibility. You want to be able to fulfill, what you've promised those investors to the best you can. Obviously, there are some external factors that could happen. Things can go wrong one way or another. It's totally fine. One of the things we talk about here is that you keep them engaged and updated with the goods and the bads. You need to leverage them, like we said, as much as possible. So make them get you access to their contact list if you need to use them as mentors and advisors for as much as you need. Just leverage them as much as you can. Like we said, keep them updated. If a problem happens with the team, like, for example, I'll give you an example. 2 months into making an investment, and it's a tech product, so it's very much reliant on having a strong chief technology officer. I meet the CEO and he tells me, listen, my CTO is leaving. So my initial reaction is like, shit, this product depends on that technology guy and he's leaving. But it's very important that he brought me on board from the very beginning, so we can think together. He can leverage me as someone who's been through that before and who's seen that before. And we probably come up with a plan to see how we can manage this. Or I had another entrepreneur who came to me. He said, one of my co-founders is stealing money, for example. So it's totally fine. Those things happen. And it's very important to just bring this attention to the investors. I will tell you something that happened in the Egyptian market a few years ago. It happened on the investor side, but it's the same idea. So, investors, nafsuhum, they get money from other investors, okay? It's not their own money, unless they are angel investors. So if they are institutional investors, like they have companies behind them and funds, they've already also taken money from other investors. And what happened is that investment team and that fund, they had a divorce, they had issues, the two partners, and they decided to split. And they did the huge mistake of not informing their investors. And the investors ended up finding out from the market about the problems and about the issues. And this was like a fatal mistake because basically they fired that manager and took all the money out. So it is very important if there is an issue, and issues could happen, it's totally fine, but please be transparent, inform your investor, because remember, he's your partner or she's your partner. You're responsible to deliver on what you've promised, but again, investors know that things could happen and you could possibly not be able. You just keep them informed, and in general, keep your contact list fresh and engaged. Can't tell you how many times after we've made an investment in a company, they stop talking to us. They stop sending us their updates and their numbers, which we need because we need to report our investors, and they just disappear. So imagine the next time they need money and they call me up and like, sorry, I don't know anything about you. I don't have your updates. You totally disappeared. You don't pick up the phone. I'm not going to give you more money. It's very simple. So it is very important to keep that list fresh. You keep talking to your investors, because you never know when you're going to need them again. You might need another round, and most investors, they do something called a follow-up. So they do the first ticket and then they do a follow-up investment. So they invest with you again. And for that to happen, that relationship has to be always ripe and flourishing, and there is always conversation going. So it's so important to do that post-investment. In general, and I think, yeah, it's my last slide, building a successful business involves multiple investment rounds. Inshallah, if the business is going well, you're going to raise a pre-seed round, a seed round, a pre-series A round, a series A round, a pre-series B round, a series B round, all the way till you actually exit the business completely and make the big bucks. But the thing is, while you know you need to raise money to grow your business fast, okay, the faster you get to profitability, the higher the return for you. Why? Like we said, because every time you get money from an investor, you lose some of your shares in the company, because they have to get something, right? So they get shares in your company. So the faster you get to profitability, meaning that the business itself is able to self-finance itself, this means you preserve your shares. So it means when you get to exit, you have the biggest shares. So let's say you're selling your company for $100 million, right? If you own 60% of the company, you get $60 million. But if you own 30% of the company only, you get $30 million. That's, in a nutshell, what basically it means to try and preserve your equity as much as possible. We're not saying don't raise money. You will need to raise money, but focus on getting your business to be profitable. Yani, the business itself is making money on its own, enough to keep funding the growth. And don't, because some entrepreneurs, they get into the fundraising mode and they can't stop. They always want to fundraise. But the thing is, their shares in the company are eaten up. So when they come to exit, they have less shares in the company. Kyrillos, go ahead, please.
So I have a small question.
Sure.
If I already have a startup that's profitable, why should I seek out investors as opposed to going to the bank and then getting a bank loan and not having to give up either shares or a percentage or even voting rights for the company?
Absolutely don't fundraise.
By the way, Kyrillos has his own business, and he's
Amazing.
studying and running his business on the side.
Fantastic. Yeah. No, don't. If you don't need to raise the money, don't raise the money. The thing is, the only reason, and this is very specific to tech businesses. I don't know what type of business you have, but usually with tech businesses, and this is also a culture that we imported from Silicon Valley, is that we want very exponential growth. And in order to fund exponential growth, you usually need huge sums of money. But if you have a traditional business, brick and mortar business that is tech enabled even, but you want to grow slowly, you're not keen on growing very fast, then don't raise money. If you're profitable and the money you're making in profits is enough to keep fueling the growth at the pace you're comfortable with, then definitely don't raise money. Go get a debt. البنوك are a bit strict about giving money to early stage businesses, but I think you need to have 2-year financials or whatever. I can't remember the rules, but again, if you don't need to give up equity, don't give up equity. خالص. You'd be in a much better position to just keep doing your thing and not raise money. Absolutely. It's a pain. It takes a very long time, but usually there is some value add, which you can still, if you engage the right people with you as mentors and advisors, you can still get that for free. Or some actually startups engage some mentors and they give them something called advisory shares. So very, very small share in the company just to keep them excited to help you and really, opened up about, and if they really believe in the business, they welcome this very much because they know that this business one day is going to sell for $1 billion, so they can get some money out of it. but definitely don't raise money if you don't need to. Definitely. Okay, I'm actually done. So happy to take in more questions and ideas, thoughts. So,
Okay, just stop sharing your screen.
okay.
I would stop it for you. Yes, you did. Oh, that's nice.
كده خلاص.
Okay, yes. And اللي قافلين the camera, please open your camera. So I want to take a screenshot of this lovely class. Okay. So any questions for Marie? حبيبة، وفاء، يوسف ويوسف، كل اسمهم يوسف معايا في الكلاس نايمين على ودانهم. اصحى كده من النوم. Okay, any questions for Marie? Okay, I hope that you you focused well with her presentation, because I'm not going to repeat what she said, and I'm going to ask you about it. And Marie, thank you so much for I'm telling you every semester بجد thank you so much. At least حتى كان المرة دي مفيش درينك عشان خاطر أعزمك عليه.
نعوضها another time.
إن شاء الله.
Please share my contacts with the class. I'm happy to take any questions. I do mentor startups all the time.
خليهم يلاقوك على
without any
LinkedIn.
money or advisory shares, don't worry. I'm more than happy. بالعكس it's a huge pleasure for me to be able to answer your questions and help you if you have ideas, if you want to run something by me. But please share my contacts with them, and more than happy to
I will share your LinkedIn profile. Okay,
sure.
so guys, keep your cameras on, and I will take a screenshot in 3, 2. ثانية واحدة، هو ايه اللي بيحصل هنا؟ Confirm your speaking language. مالناش دعوة بيقطعنا. اوكي يلا 3 2 1. say good Narumi. Okay. Marie, thank you so much for your time. واشوفك ان شاء الله.